The doomsday clock is ticking. This statement formed part of the opening speech of Boris Johnson, Prime Minister of the UK, at the COP26 that he hosted that just rounded up. Now, thousands of participants, including heads of state, activists, scientists, and oil industry representatives, met to deliberate and agree on how best to set actionable timelines that will ensure that the world will be pulled back from the edge of the climate change precipice. But has anything really changed? Is the world ready to make the necessary changes? At COP25 in Paris, the wealthiest nations, who are the major emitters of greenhouse gases, continued and renewed the pledge of $100 billion, but failed to contribute to easing the transition for countries in Africa, Oceania, Latin America, and the Far East. This is the countries most affected by climate change. But why is this a business conversation and one of particular importance for Africa? The continent is home to countries with abundant natural resources, particularly gas, crude oil, and coal. But these are the same resources that the world is trying to move away from, as scientists warn of the point of no return. Unfortunately, these very resources have the potential to not only power African economies, but add hundreds of thousands of jobs and lift millions out of poverty. So is there a middle ground for Africa in this? Is there a way Africa can still win in this occasion? Today, we're looking at how COP26 resolutions will affect Africa. I'm Tolulope, Adeleru-Balogun. Welcome. This is Business Aid. Now joining me is James Mackay, Energy and Infrastructure Strategy Lead for PwC South Africa. James, welcome to Business Edge and thank you so much for joining me.
Greetings and very good morning to your listeners in Nigeria.
All right, so let's start with a bit of background, particularly on this $100 billion pledge that has been reoccurring for so many years now. Let's look at that. So developed countries pledge $100 billion per year by 2020 for climate action in developing countries, like the majority that are here on the continent. And this has been ongoing since about 2009. So many people have agreed that the deadline for 2020 has been missed. It's likely been shifted to 2023. But give us an update. Where is the world particularly on these pledges?
Yeah, thank you very much. So maybe just also to kind of put in context, I think COP26 in certain regards has been a major step forward. I think the level of debate, the discussion, the openness around, this is now a global crisis, and we actually need to treat it as a single planet. And for far too long, and I think there still is a big degree of creating winners and losers. And we see this within industries, we see this fossil fuels against renewables, we see this as developed countries, developing countries. So overwhelmingly, the developing world went to COP26 and said, we are committed to saving the planet. We didn't cause this cumulative emissions problem. I mean, Africa in total represents 3% of cumulative emissions to date. So, if you had to put blame, it certainly wouldn't be on Africa causing climate change. So then, if one looks at just the mere cost of decarbonizing Africa's current energy sector, we've estimated that it will cost about $2.8 trillion. Now, that's not even to solve energy poverty under the Sustainability Development Goals. That's just to transition what we currently have from fossil fuels towards renewables. We've also done, work in our recent energy review. Africa has about $15.7 trillion of proven fossil fuel reserves, so oil, gas, and coal, as you've mentioned. On the current sort of projections, we estimate that probably 6.7 trillion of those proven reserves would just stay in the ground. So Africa would not be able to sell those reserves and hence would miss out on the revenue opportunity, the growth, the industrialization, and the jobs. So one can see this gap between, we're still in the mindset, I think, of winners and losers. And we've really got to push through that now, and hopefully we'll see COP27 in Egypt next year. Is got to take this is not about winners and losers. This is about how we save the planet. It's a non-negotiable. So I think that the developed world has sort of stepped back and said, yes, the $100 billion that was committed really 50-50 for climate change mitigation as well as adaptation That has to happen. And that is actually only scratching the surface. There's significantly more that does need to happen. I think everyone was very excited to see the climate finance deal that was done for South Africa, the $8.5 billion, really to assist an accelerated decarbonization, particularly of Eskom and the coal-fired power generation, but also including some portions of electric mobility transition and green hydrogen. So I think there's some great takeaways from COP26, but bottom line, certainly not enough. I think going into COP26, the world was supposedly on a 2.7 degree pathway. On the renewed pledges of, scale down coal, there's talk of about sort of 2.3, but we're still a long way from 1.5.
Okay. So, James, I find something you say interesting, that this conversation shouldn't be about developed countries and developing, about winners and losers. But when you make reference to even the energy needs that the continent has, one African, apparently, according to research, uses less than the average refrigerator in terms of electricity in the US or Europe in 1 year. But when you look at the priorities, the West has developed. They've gone through the first, the second, and third industrial revolutions. We're looking at a fourth industrial revolution now. Africa has these natural resources. You're telling me that over 6-point-something billion or trillion of these resources will end up staying in the ground, which means less jobs, less Africans lifted out of poverty. So if we're not looking at this purely in a black and white situation, how do we look at it? Because our priorities are clearly very different.
Absolutely. And it was interesting. I was on a recent discussion where someone called this, they said the $1 million question. And I said, actually, no, it's $1 trillion question. The problem is it's expensive. There is absolutely no doubt. I've yet to hear anyone who says coal mustn't be phased out or that we mustn't remove to renewables. In South Africa, we've just had bid window 5 on our renewable energy auction. The wind and solar price bids that came in, we closed 2.6 gigawatts of new generation. The lowest on the auction was cheaper than just the coal costs. So it's cheaper to build new renewable energy than to actually maintain and continue to run oil and coal facilities. So it's not a question of economics or commercial or planet. We've got to get our heads around, we have to make this transition. The problem is, as you've said, and again, as an example, so sub-Saharan Africa, excluding South Africa, there's, I did a couple of 600-700 million people, has the same generating capacity as Germany with 83 million people. So there's clearly a huge disparity between what Africa needs to do versus what they can afford to do. It's not a question of we're not going to go there. It's a question of how does the developed world, how do we do what's in the interest of the planet, which keeps us all safe, but at the same time, the developed world really just does need to come to the party. And I think that, to me, was a big realization and a commitment at COP26. If I can just also reference, the Minister of Barbados made a fantastic speech, if any of your listeners want to Google that. But one of the key points that she made is that the developed world has spent nearly $9 trillion in quantitative easing post-COVID. So her point was, actually, there's no shortage of money. The shortage is getting away from this winners and losers where politicians want to spend on their own sort of longevity and own sort of constituents to preserve their own political benefit, and they've got to move into save the planet zone, which means that we all need to move together, and we've got to close these gaps in Africa.
Okay, so let's quickly go back to climate financing before we move on. So we've seen the agreements come. Africa didn't particularly come with one voice, because this was also a point of contention in some of the conversations we've had, that Africa is not going as a bloc to represent its issues, even though it is one of the most hard-hit continents when it comes to the issues of climate change. But the priorities that individual African countries had going into COP26 and coming out, do you think they've been met? And are we able to move forward with the climate financing conversation? We've had pledges since 2009 when the world agreed to the $100 billion a year until 2020. COVID-19 was no one's mess, and no one could have anticipated it. Obviously, that has shifted that. But do you think Africa's priorities were duly laid on the table? Again, emphasizing the point that we are actually aiming for different things than many of the developed countries at this point in time.
To take a hard position on it, I think the answer is no. I don't think we do enough as Africa to create good, robust master plans of what we actually want and how we can deliver it. We certainly don't create good regional integration and good regional planning. So we don't necessarily harness the scale that we do have. We've got 54 countries. Actually, 35 of African countries have committed in some form to a net zero pathway. So it's not a question that Africa is saying that we won't do it. They're saying, yes, we recognize that we will do it. And there's a very positive sentiment around that. But clearly, they can't afford to do it on the back of the economic and fiscal kind of pressure, as you mentioned, in a post-COVID world. So creating an Africa One Voice, an Africa Better Africa plan, and leveraging what do we do have. So, in our report as well, we say that Africa's got 455 TCFs of natural gas sitting in the ground. It's a huge resource. Natural gas is 40% odd cleaner, certainly even more than that on coal. It is also a variable energy supply, so it goes well with renewable energies, wind and solar, because you can have different dispatch. It can be modular, it can be sort of local, it can be rural. So, so natural gas would be an optimal pathway for Africa, but we need a much more cohesive, almost like global or not continental strategy. And we need better alignment to go with these plans and go to the developed world and say, right, here's our commitment. This is what we need. This is what you do. And this is what we can do. Because I think that really then creates that synergy where you kind of avoid the winners and losers. And you start to say, let's work around a plan.
All right, James, we're going to take a break. When we come back, we'll look at some phrasing that came up towards the end. India made a point that Nigeria also supported, and we'll also take a look at that plan, as you mentioned, that South Africa's plan that could be a master plan. It could be a framework for many other African nations in terms of how they sort to move towards a net zero pathway. We're looking at conversations coming up after COP26 and what the resolutions from COP26 mean for the African continent as well as African economies. This is Business Edge. After this break, the conversation continues. And still with me is James Mackay, Energy and Infrastructure Strategy Lead with PwC South Africa, looking at the resolutions coming from COP26 and what they mean for the continent. So, James, there was an interesting sort of thing that happened towards the end. So, India, with the support of Nigeria, led the debate that changed the wording at the last minute from phased out to phased down. Is this of economic significance? What importance can this have, this particular change of phrasing, for the conversation we're having around Africa's natural resources and the ability to use them, even as the world is moving towards net zero emissions?
So I suppose it's semantics. What's in it, phase down, phase out. I don't think that there's any debate that coal's got to go. The question around those wording is how quickly. And so the question of how quickly you phase out coal is actually the question of how quickly you can invest and ramp up renewable energy. Because if we've all agreed that coal is destroying the planet and the environment, we know it's got to go. Really, it's the balancing kind of position of how quickly you can build out clean energy. So if we could answer the question of how we can accelerate clean energy, build that quicker, better, it makes it much easier to whether we want to phase down or phase out coal is really, neither here nor there, because really what we've got to do is not try and focus on defending the coal, but how do we go and attack and get renewable energy in place? Maybe I can also just say is that I think it's quite well proven, and we've actually, in our report, we've looked at it. Renewable energy sector in general makes significantly more jobs because it's decentralized. It is lower risk, lower cost. It's better for the economy. It creates more jobs at the sort of the skilled level because it's also, there's less sort of mechanized sort of capital investment. And so it is actually better for the economy. So we need to look at the positive opportunity, balance that with realistically, how do we then keep coal, run it, but as renewables will grow, we phase down coal. So I don't see a problem with that. But if we stop the conversation at phase down coal, we've got a massive problem at a global planet sustainability level. And
this is not just a conversation about coal. It's about the natural resources that the continent has. as well as the energy deficiency that we have as well. And it's about timelines. Is there still time for Africa to take full, I guess, measure of the resources that we have? We've seen a reduction already of investments in the crude oil energy sector particularly, and you're seeing that divestments in Nigeria happening. It's happening across the continent as well as energy majors try to also move into the renewable space. Is there a timeline to how much time the continent has to sort of make use of these resources and make money, even though with the research you're telling us we're already going to be out about $6 trillion because that amount of resources will stay in the ground as the world moves down this new path?
Yeah, so unfortunately, capital investment in sort of the oil, mostly oil and coal, partly is also gas in Africa, has been on the decline for the last 5 years. COVID, I think, just really made that a lot worse. And so we saw quite a big sort of reduction in investment, but also production and in the sort of the fossil fuel industries. There is a sort of a more energy intensive bounce back in a post-COVID world. But you know, if one goes to the richer nations, the ones that even seen this, you know, which I don't know, personally, I wasn't always that comfortable with, but richer nations can afford to extend their fossil fuel reserves. And we've even seen countries like Norway making new investments at this stage on extending those reserves. But African countries can't, but yet they are being penalized because the global financing policies around fossil fuels pretty much now, and we've seen globally, all countries have pretty much signed up to say that they will not fund any offshore coal, which means countries like Russia, China, you know, India, they can fund their own coal development, but countries like Mozambique or South Africa potentially can't fund their own coal development. So I think that there are some real concerns around how this transition happens, and there's a lot of work that needs to be done. And there's probably 2 points that I would like to raise then is that I don't think it's feasible, and it shouldn't be morally acceptable that we just defend fossil fuels. We need to come up with a plan and say, what is the gap? How do we transition as Africa? How do we do it most efficiently as possible with transparency and good governance? And then what is the investment gap? Or what is the technology and the support gap even? We then can table that on a global platform and say, well, if we want to save the planet collectively, we need support and need help. And I think that conversation really kind of landed well and was engaged on at COP26. The other point that I would like to make is that even if the developed world provided all of that finance, the finance is not, and this is very much the climate finance deal with South Africa, is that finance is not it's not a grant. It is majority loans. Yes, it's concessional loans, which is very attractive and very good, but it still goes onto the balance sheet and you still have to pay it back. So the citizens of South Africa, in the long run, will still have to pay that back. And we know what, you know, the per capita income sort of ratios are of a African citizen versus a Germany or an Australian or New Zealand citizen. So they can afford to pay those kind of transition costs through the tax base. Africa largely can't. So I think there's challenges in those finance mechanisms which we've got to think about more deeply.
And I think it's interesting you bring that up. So that's one part where we're seeing a lot of conversation. African leaders are sort of pushing back that they should not be dictated to as to what they do with these natural resources, that it should be about grants and not loans, so that it's not basically indebting future generations of Africans to be able to do this. But you're talking about this South African deal. That might be one of the negatives, but let's look at it in terms of what the positives are and what other countries can look at in terms of possibly getting some of these kind of deals in the future. What else is wrapped up in this deal that South Africa has been able to put together?
So in principle, there are three focus areas. One is supporting the sort of the just transition impact of decarbonizing coal out of Eskom. So bearing in mind that in terms of the national planning, Eskom has already planned or committed to decommissioning about 11 gigawatts of coal-fired power stations by 2030. So that will be almost 40% of the fleet. The problem in that, again, is our national planning requires for an increase, I think, of total of about 17 gigawatts of new energy, of which 14 gigawatts is renewables, and then there's about 3 of gas to power. So from an overall energy balance, that looks very good. However, there are big costs associated with decommissioning coal-fired power stations, and there are stranded workers, communities, and industrial areas which also need to be funded. It's not a one-for-one. So in the renewable sector, certainly we see in South Africa, it is very buoyant. There are new companies opening. International developers are coming and setting up shop. There is a great story to be told around the growth and development of renewable energy. But that is not a one-to-one offset of the costs and the adversity that's going to be faced in the coal sector. So one of the big areas of that investment is to try and bridge this gap to make sure that there is a smooth and sustainable transition around the energy kind of mix of technologies. The second area was to try and start to pivot, because the second biggest area of emissions in any sort of country would be transport. So that's from heavy mobility through marine, aviation, trucking, railways. So there's a portion of focus of that funding would be to try and accelerate or transition electric mobility in South Africa. And I think that that's largely going to try and start and focusing on looking at government sector fleets and saying, how could you use that to create some scale in the charging infrastructure and the base infrastructure that generally the sort of markets could jump on and expand on. The third sector was to look at green hydrogen. And green hydrogen has a double benefit. One is it is probably the only really suitable green energy vector to decarbonize those very big industries like steel and cement and some of those and very energy intensive users. And the second one is it can be a source of foreign direct income through exports of different vectors, green ammonia, green methanol, or direct green hydrogen. So it's a very attractive economic play if one can both use it for domestic use as well as international exports.
Okay. James, we are just starting this conversation because it's necessary for Africa to make its voice heard and prioritize. And there's conversations around public sector governance, private partnerships, as well as blended finance, making it easy for the continent to surmount the challenges around transitioning. But we're out of time today. I do know that we'll definitely be having you back to look more into the strategy of things. James, thank you so much for joining me on Business Edge.
Pleasure. Thank you for having me.
All right. It's getting to the point we understand on Business Edge that time is not enough, and very soon we'll be extending the show so that we can make sure we finalize these conversations to the most. But let me tell you this. The average African uses less electricity every year than one refrigerator consumes in the US or Europe. But this is going to grow, especially as temperatures rise and as Africans will have more energy needs to cool their homes and irrigate their farms. Africa, too, must be allowed to develop and build up its infrastructure, something that requires more energy. So the question continues to be asked, where does the future lie for Africa regarding climate change and the continent's energy needs? We'll continue speaking to the experts, the analysts, and those who are involved in making sure that African economies can grow like they need to, but also be on the right path for the environment. This is Business Edge. The right path we have for you now is NC4 to watch. Just stick around. And we start looking at one of the three that we mentioned today. Crude oil prices have slipped on Monday under pressure from expectations of higher supplies and weakening demand. Now, Brent crude futures fell 58 cents to $81.59 a barrel early this morning. U.S. West Texas Intermediate crude lost 58 cents as well to land at $80.21 a barrel. Now, Kenya has recorded an accelerated growth in the aggregate output of 10.1% in Q2 of 2021 compared to a contraction of 4.7% in the same quarter of 2020. According to the Kenya National Bureau of Statistics, the economic growth declined to 0.7% in Q1 2021 compared to 4.4% in Q1 2020 due to the effects of the pandemic on the economy. Dutch multinational brewing company Heineken NV has offered to buy South African wine and spirits maker Destil Group Holdings and Namibia Brewing Limited, which will be combined with Heineken South Africa into a new Heineken majority-owned business with a total valuation of approximately 4 billion euros. And finally, gold steadied as investors mulled what's next for inflation and monetary policy while scrutinizing better than expected economic data from China. Bullion finished last week at its highest since June as accelerating price pressures rocked bond markets and fueled demand for the traditional haven. Treasuries are steady on Monday as investors await public appearances by U.S. Federal Reserve officials and other central bankers in the coming days. And that's Business Edge, where we talk about all things business, economics, and of course financial as it relates to the African continent. We'll see you again sometime soon. Don't forget our social media at News Central TV. Download our mobile app. Take us with you wherever you go and hit us up on our platforms wherever you are. I'm Tolulope. Adeleru-Balogun. Have a pleasant day.